Today, the stock market was packed with lots of interesting news. I'm going to touch on a few topics that I found very interesting, including Google, Apple, Disney, and the results or the update that we got from the Federal Reserve concerning interest rates. But before we get started, if you're not already, subscribe, give the video a thumbs up, and make sure to leave me some comments. So let's start with Disney. On the day, Disney is up 10.79%. So, what is going on with them? Why did Disney stock soar today? First up, let me give you a quick update when it comes to their earnings. Disney reported a 5% increase in quarterly revenue and a 44% jump in earnings per share. They came in better across the board when it comes to not just that, but their experience revenues, their Disney Plus subscriptions, everything is looking good. Comes to Disney Plus and Hulu, they now have a combined 178 million paid subscribers. The company has also posted positive free cash flow, and this is a sign of strong financial health. Their CEO, Bob Iger, announced plans of a spinoff of ESPN as a standalone sports streaming app. Disney has invested heavily into its experiences division, the theme parks, the cruises, the global events. And on top of all of that, right behind the announcement on these earnings that came in very favorable, Disney has announced that they are planning to expand into the Middle East with a new theme park in Abu Dhabi. So, what it boils down to is currently Disney is making more money, spending smarter, growing in areas that fans love the most, those theme parks as well as sports. So, when it comes to your personal love for Disney, what business do you think has the most growth potential? Is it the streaming services, the parks, or ESPN? So, all the stocks that I'm going to talk about today, I hold them in my portfolio. So, I'm going to share my personal results along with the updates. So, when it comes to Disney, it's less than 3% of my growth portfolio. It's something that I have not been inclined to build into because when you zoom out over the last year, for example, Disney is down 3.13%. I've been investing into it longer and I have a higher average. So I've been in the red when it comes to Disney for a while. It is good to see that they're thriving and they've had some good news recently with the two updates that I just shared. But overall, my Disney position is down 12.34%. My average cost is $116.36. So for right now, the only way that this is going to be building up, I'm not adding any more shares. I'll just let the drip remain on, and that will continue to add just a little bit to my position. But I've decided to focus on other things and never continued building this up, even when I could have taken an opportunity to bring my average down. Now let's take a look at Apple. Current stock price $196.25 on the day, down 1.14%. Over the last 5 days, down 6.12%. So, what's going on with Apple right now? This is one thing that's affecting their stock price. Apple has cut share buybacks and the stock got hit. Here's what sellers are missing. So let's talk about it. Apple recently cut back on their share buying back program, and investors didn't love that. The stock dropped slightly after the news. Here's why this happened. Apple typically spends billions buying back its own shares. Many companies do this. This helps raise the share price by lowering the number of available shares. So, by cutting back on shares, this can signal that the leadership sees better use for the cash, like investing into AI, infrastructure, and new products. But on the other hand, this may not be the way that investors interpret this. They may take it as a loss of confidence from the company, but Apple is still a strong company. They have a large amount of cash on hand and they are remaining profitable. But as I said, investors might confuse this and misunderstand why they would not be currently investing and putting that money back into their own stock. So Apple is tightening their belt, but they're not in trouble. They're just making this as a strategic move in order to prepare for the next phase of what they want to do with the company. As I was looking at this, I was also thinking that the tariffs and the changes that they have upcoming may also be things that they're factoring in making this decision to put focus in other areas. So, what are your thoughts? Do you think that Apple should keep buying back more of their shares, or is it smart to invest into new innovations? Let me know in the comments. Now, when it comes to my position into Apple stock, I'm currently up just 27.70%. On the day, I'm down about 1%, and my average price is 153.91. And as we can see, as I said earlier, the current stock price is 196.25. So many of my positions are not as deep in profit as I was prior to the start of 2025. As you can see here, Apple stock year to date is down 21.63%. So basically, what I'm saying is a few months ago, most of my portfolio was up over 50%. And I'm seeing the difference, but continuing to invest and hold on because I am a long term investor waiting for the recovery in the future. Now we're going to talk about some Google and Apple news that overlaps. On the day, Google is currently down 7.26%, but earlier today it was down over 8%. Google, aka Alphabet, their stock dropped today. Its key partner, Apple, indicated that Google's days of search engine dominance on Apple devices may be numbered. This led to a $160 billion drop, a massive sell off in the amount that is more than the total valuation of entire companies like Boeing, Nike, or Starbucks. All of this occurred during a court case where an Apple executive suggested that Google's dominance in Safari may not last. Basically, saying that Google could lose its default search engine deal on Apple devices. This deal is worth billions in ad revenue every year. If Apple switches or creates its own search engine, this would be a big loss for Google. At the same time, Google announced a major investment into some nuclear power plants. So they're making strides to back this company and develop 3 new power sites. So I'm throwing this in there. All of this news came out today just to show you that these big companies may have some setbacks, but they're making sure to diversify and poison themselves to stay profitable and relevant long term. And Google also entered into another similar deal back in October of 2024. We're already dealing with ongoing trade tensions, and new tariffs have created an unpredictable economic environment. The Fed is concerned about the potential for rising inflation as well as unemployment. So they're just taking it slow, taking a wait and see approach, monitoring economic data closely before making any further changes to interest rates. So, Jerome Powell, the Federal Reserve, is standing strong and saying that they won't move interest rates despite repeated loud requests from the Oval Office. So, for now, how does this affect us? Borrowing costs, interest rates when it comes to our credit cards, as well as getting loans, is going to remain the same. When it comes to our savings account, that should also remain the same. And when it comes to our investment accounts, we will see in time how that is affected. But there are so many different elements that can also affect our individual investments, our ETFs that are led by these big names, like the few headlines that we took a look at today. We see how significantly Google was impacted by this announcement and information that came out related to their relationship with Apple. So we'll be getting our next update from the Fed in mid June. And if Jerome Powell remains in this position, I'm sure that he will continue to assess what is going on with the economy and move forward with what he feels is the best course of action. But for now, I'm going to continue investing, let all of my investments remain in place because I know that I invested into good, solid companies. I'm going to keep on taking advantage of my high yield savings account, money market accounts, and all of the ways that I am trying to make sure to maximize my money. So, just to recap what we went over, Disney stock soaring due to those strong earnings, as well as making bold moves to make sure to bring the company in a new direction with this new park and focusing on the areas that have been helping the company to grow, like their sports segment with ESPN. Apple continuing to keep themselves on track to stay profitable long term, and Google facing a huge loss today, but at the same time making sure to diversify into other areas like clean energy. So, if you're a long term investor like me, this type of news reminds us that we have to invest in companies that give our portfolios diversification, that we see that they are focused on making sure that their fundamentals are strong and not be shaken out of good positions because of short term headlines and volatility related to things like we took a look at today or the tariffs. So I hope you enjoyed this quick update. Make sure to like, subscribe, hit that notification bell. Make sure it's set to all so you can keep up with all of my videos and live streams. Are you currently holding any of these three stocks, Disney, Google, or Apple? How is your position looking? Don't forget to drop me some comments. Thanks for watching. I am Lisa J. Stocks, and I will see you soon. Okay, bye.